Yo, 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 guys, we got the break. It broke to the upside. All right, so this is the video that we covered yesterday, and we have our confirmation, man. So this phase confirmation now is what this video is going to talk about. But as always, guys, remember, before I get started, you got to smash that like button. You got to subscribe. Those are the rules, and let's get to it. All right. So this is going to be fun because, man, this AMC phase, this pattern phase that we are going to study here a little bit, we're going to be taking a look at a lot of reference patterns with this one. And I've been saving these up for the right time because now that we do have this volume coming in, we have some volatility kicking in, and we are inside the cycle as well. Okay, so this POI, for those that follow me on Twitter, this 13-day window that we have going on right now in the ARC, the AMC 62-day cycle, we finally have ourselves some volatility. And we experienced that on the last POI, and we are currently experiencing that on this POI as well. Okay? So we're going to take a look at this pattern structure, and I'm going to talk a little bit about why I think that AMC is replicating this. But we need to look at these reference patterns to sort of analyze this. And there's three starting points that we have here, guys. So there's some reference patterns that we have tracking right now that have more historical data, right? The more historical data you have, the better. And a lot of these patterns, right, or at least most of these patterns, have this right here. So this the last POI, the last volatility zone, which is very important because that is what starts off this sequence that we're working with right here. And then there's a lot of patterns that also have correlation starting from here, not as much correlation from the initial POI. Okay, so we're going to be taking a look at both, and there's one that also has correlation back here. All right. Okay, so what is this pattern? What is this pattern that we're taking a look at right here? So this is a accumulation pattern on the micro charts. Okay, so we're not looking much further from the AMC chart. We're just looking at what's inside, again, this window, this box right here. And this is accumulation based on this pattern. What this does is that it shoots the price after the price consolidates for a little bit of time on the micro. It breaks out, and we enter a reaccumulation phase. So everything that we've talked about as far as the AMC cycle goes and where we are on the macro, right? We think we're in accumulation, about to enter reaccumulation. This is a little bit different because we're looking at it, the last month. And that's the thing with these cycles, right? Like we have time frames we need to look at. Right now, being on the micro, this is what this pattern's replicating right now with all these reference patterns that we're going to talk about. Okay, so we're going to start off with JVO. Okay. All right. So a lot of these patterns, there's only a few that are fractals, but a lot of these patterns are patterns that were found with the pattern scatter, Plotzy. Okay. So these are 1-to-1, okay, which is even better. All right. So this one does have data from, previously before this POI took place. We do also have that correlation, which is good. It even backs it up even more. And what I wanted to look at here is this is all about correlation, guys, and probability. If we're taking a look at a pattern structure, right, that is playing out, we need to look at the levels, and we need to look at the timing, and we also need to look at if that has played out already in the sequence, because we know that with these, sequences that we track, that some of these patterns play out earlier in sped up form, so they're a little bit smaller, or they play out later. They can also be stretched out. They can take a little bit longer to play out. But most of these that we're going to be looking at are 1-to-1, so they're tracking with the timing, with the levels, everything, all that good stuff. So this is JVO right here, and as we can see, I'm going to be using this path tool a lot here. This in blue right here. Okay, this is the version that it's currently tracking. So what it does is it creates a projector that fails, and then we have ourselves a volatility zone right here, because this is where we can see the volume surpasses the previous two resistance levels, which on AMC we haven't done yet. We're replicating that projector, that failed, which creates a parallel channel, right? But we have not broken the previous resistance. So as soon as we break this resistance, that's going to be the first time we break macro resistance in the sequence, which is what happened over here with JVO. And it's the same structure and everything. If we overlay this pattern on top, I'm going to be doing that with every single pattern so you guys know. Okay, we get ourselves this right here. Again, everything matches up according to the POIs, right? The structure is sped up on, in certain parts of the sequence here, and some of them are slowed down. But mainly, if you zoom out on the daily chart, this pattern is pretty much tracking 1-to-1, and it's telling us that there's a POI right here. Okay, so that's good news. All right, we have JVO. Let's go back a little bit here. All right, we also have Loom. Now, this is a cryptocurrency. A lot of cryptocurrencies, as you guys know, we track because we think that the cryptocurrency market, depending on where how the cycle is tracking based on whether meme stocks are going first or meme cryptos are going first, we use these for reference patterns. So we used Ethereum Classic a while ago to track AMC, and that worked for a little while. And this is, there's a few cryptocurrencies, but I want to talk about this one in particular because I think this one does have some good correlation as well. So again, with the whole thing, right, we start off from the volatility zone, right? It trades sideways, and then we get to this middle part right here, accumulation. Its own form, we get resistance right here, gets crossed, retested 3 times, but in its own form, right? And then as soon as we come down to this 4th retest, we have a fake out and then a continuation all the way back up to the $14 range. So a lot of these patterns are going to be calling for different levels. Okay, the levels that I track here are based on many things, right? We talk about the option chain, which is one thing, and then also the majority of reference patterns. That's where it comes with the whole probability thing, right? If there's 10 reference patterns that we're tracking and most of them have a stop point in resistance around the same level, then that becomes not only a point of interest, right, in the timing, but also a point of interest for the levels to track. And in this case right now, we have about $8 for this first volatility zone. But anything on the way up, guys, as this thing starts to climb back up, it can start triggering these next levels. Again, you have to remember that a lot of these patterns, they slow down in time, can come back down, stay in a parallel channel, or they can speed up and go back up very quickly. Considering we're inside a POI, a volatility zone, okay, the probability goes even higher, right, based on that. So this is Loom, another one. AMTX, I like this one a lot. This one here, okay, overlaying it on top again, POI hits, and then now the structure, this is the cool part about the structure. And these over here start right here, going down the line. Okay, so this volatility zone, micro volatility zone that happened in June, okay, it's very important to track this one because this is how we're getting most of these patterns checked off. So there's a few fake outs, right? This is what establishes accumulation. You go up, it gets shut down again, it trades sideways, they continue the theta channel that we talked about, and then it starts climbing back up to reach macro resistance, right? So 2 times, very important, but 2 times all of these patterns come up and retest resistance, right? So the first one, June 3rd, the second one, June 7th, the same week. They all do that. They all have that in common. Then they all come back down, create a, some kind of bottom. Okay, some of them do spring. We have plug, that's the one that does spring. But most of them do remain retesting support, right? So most of them will have a support level that they are respecting, okay? Depending on where you take the support level from, all right? So AMTX, another one that looks pretty good, calling for, a good amount of upside. All right, here's plug. This plug does have a spring. Okay, overlaying it on top again. And you can see this one here is probably going to be one of the more accurate ones. Okay, because the spring behaves in a similar fashion. It doesn't quite come down and fill the gap or cross support on the macro, but it does. Plug being that it is a stock, okay, being that it is also a one-to-one pattern, okay, this is where you can compare the two, especially if they do have an option chain, right? Option chains are important here in the way that these guys leverage their positions and pump and dump stocks before the expiration date, right, to meet their requirements. All right, so also calling for the same thing, we have support and resistance being hit at the same time. And I'm doing guys, I'm doing this for all of them so you understand a little bit of why these patterns end up happening in the markets. This is all market makers replicating these patterns. They're from 2000, some of them are from 2013. Others are closer dated. The crypto ones are closer dated because those are typically used. Again, we think they're used for liquidity, pump and dump liquidity from the crypto markets to the stock market, vice versa, right? But same thing. You have it starting this accumulation pattern right here in May. You have it doing the same thing. Anything before that is relevant, is going to be more relevant, but the more pattern structure that we can put and overlay on top, check off, the better. All right, we got plug. We also have Ratz. This is another one that looks very similar to plug. You can see the spring happens a little bit earlier. Ratz, this is a cryptocurrency. And same thing, right? Double top, spring, rides back up, and then we have a macro POI. And then we have meme. This right here is probably going to be the most accurate in terms of the levels go, right? The levels is one thing, guys, that we track. But if you overlay this one on top, I mean, the two are pretty much the same. The only thing that is not accurate is the timing, right? The timing is not as accurate because you can see right here, this would be calling for the $8 range by last week, right? Which that did not happen. But this is good to track for levels because all the levels have been respected. Comes back down to the same low, and then right now we're trading at the 6, pretty much the 5 to 550 range going on 6. Hopefully by the end of the week here would be ideal. But again, this phase right here, if we zoom in, it's likely that AMC is replicating this, except stretched, right? So pretty much saying that this smaller phase in the meme sequence here is slower, okay? And then finally, we have AMC, guys. AMC in 2020 already did this in its own version, right? And this would be calling for a pretty big push, but we don't use these. A lot of people think that we use these to call, this is a prime example, guys, of what not to do when it comes to reference patterns. Most of these reference patterns are calling for upside, but because we're tracking a micro level here in this sequence, right? This doesn't have the historical data, right? We don't have AMC having a major volatility zone and then coming back down. That's very relevant to the sequence. So it's very likely that this right here is just a phase that happened after, right? That happened after in this sequence before. So if you flipped it over, this would be January 2021. Imagine that this liquidity happens over here, and then this liquidity happens after, right? That's pretty much what's happening. It's backwards. At least that's the way that I see it. But it doesn't take away from the POI, right? The POI is coming. There's a POI that's close. And again, this would mean that this entire section, starting from here, would be slowed. It's stretched out, takes a little bit more time, consolidates, and then boom, it starts climbing back up. Okay, so that's like the accumulation phase that we're tracking right now. I think that's what AMC is doing. Being that we are inside the POI, I think it's likely that we will see the $7 to $8 range by the middle of June. It's possible that this week, all right, if you zoom in a little bit, the price is pretty much trading in a range here, but it did respect like it's holding up pretty well. Like this doesn't look like it's going to dump anytime soon. As long as we respect the 520 range, I think even if it comes close to that range tomorrow, as long as we respect this and create some kind of rising flag, or even, as we say, right, this M-shaped pattern here that typically happens before major run-ups. It's just a version of the projector. As long as that happens, I think AMC is primed to climb back up and see that $8 range soon. Those are my projections, guys, for the week. Again, I hope you guys like this analysis video, just talking a little bit about, the cycle phases and cycle, yeah, the cycle phases, man, the structure of these patterns with these reference patterns, right? And yeah, guys, a lot of this is what we do on the Discord with other stocks in the market. So if you want to check out and learn a little bit more about that, you go over it on the Discord. There's a lot of other plays and stuff in there. Check that out. And I will see you guys on the next video, all right? All right, bye-bye.